Okay, you're good to go.
Okay, 1 second. Okay, how we doing out there? Sound check, doing good? And I am sharing my screen. Can you guys see my screen? How we doing out there, Cam? Okay, this is Coach Gino, TackleTrading.com. This is YouTube Live. We're going to go over the art of the stop loss. How are we doing out there? Good? I have a little bit of a lag here at the camera, but I am now updating this. I have a little bit of a lag. There we go. Okay. So this is Coach Gino, TackleTrading.com. I'm going to jump into this. Today's markets are volatile. And a lot of people get whipsawed, a lot of breakouts, new highs in the market. We're reopening the economy coming out of a pandemic. A lot of questions coming in from our professional members out there, tackle trading, regarding stop losses. Where do you put the stop losses? The market's overextended. And where do we go from here? For example, we just throw a very popular stock in there. Let's say you're an Apple right now. Let's say you're an Apple. And you just saw many stocks like Apple break out to new highs. What do? Where's your stop loss go in a situation like this? Where should it be? There's such a wide range of where you can put it between the current price and the last support. So what I'm going to do is I'm going to go back to basics. Nothing is more frustrating than when you get a good play, good stock breakout, and they break out, start making you money, and it turns around on you, goes back down, you give the profits back, and what have you. It's called a whipsaw. So how to play a stop loss where it's not too close and to where you get stopped out too quickly, and it's not too far away to where you give up too much risk. There's a balance between risk and reward. You want to stay in the trade as long as it's doing everything you planned it to do. If you're bullish and it's still bullish, why would you get out? But it's not as pretty as a textbook uptrend. You get a lot of whipsaws in there, a lot of false breakouts. In fact, since I'm looking at Apple right now, just to give you a little bit of what I'm talking about, if you're brand new, whipsaw basically means you planned to trade, you did everything by the books, but the trade kicked you out and then went up and made money. Has that happened to anybody here? I'm looking at the questions here. There's like a 10, 15 second lag on YouTube Live. So if you have a good example of a whipsaw where you've been stopped out recently and then the stock kept on going without you, let me know that symbol. We'll look at it because I'm going to fly through some slides, and then I'm going to, and that happens quite a bit on day trading, right? I'm going to fly through some slides from our STEP program because we address this very thoroughly and have a very, very awesome detailed plan on our STEP system. If you guys haven't taken the STEP system, it's an absolute must. It addresses the basics like this. But do you see in here, for example, Apple? Here is a trade that's been on our watch list many, many times. And I'm going to back up to, 520. Now, how I do that is I just go like this. I'm going to zoom into right here. I'm going to zoom in. Now, I'm using Thinkorswim, by the way, guys. So let's say I had a trigger right here above this double top. Now, this is what we call a very, very common setup pattern. Now, setup pattern. Now, in fact, what I'm going to do is I'm going to get rid of all my indicators below because we're not going to need those. I'm not going to need any of those. So let me remove those down there. And I'm going to get rid of the RSI. And all I'm going to focus on today is patterns and volume. So you see this double top up here. I'm going to highlight this in a brighter color. This is an area of resistance. Now, very popular. There's two main setup we look for, two identifications that we look for, trade ID. We want to get in on a swing low, which is when something's already bullish. It's trending upwards, and the definition of that is higher high and a higher low. So this last high is higher than the previous highs. This low is higher than the previous lows. That's the definition of an uptrend. But where you enter on that trend is everything. And where you enter the stop is even more important. So right here, we see this bullish trend forming. And a lot of times you'll notice I'm going to trace over the 20-day moving average. Do you guys see that? I'm using a 20-day exponential. It's called a 20-day EMA. Now, I like the 20-day exponential better than the simple because I see that it uses it more often. Based on the trading and the back testing and the stocks I trade, the 20 EMA works best for me. Now, you can use whatever you want. It could be the 21-day, the simple moving average, whatever. But usually traders, especially swing traders, use something close to the 20. That's just a norm right now. That's the way it's been for a long time. So notice how it found support on the 20. The trigger on this would be right here. Now, when something is in an uptrend and it pulls back to support, here's that support line. The trigger right here is called a swing. And very simply, you put your stop loss below the last support. And I'm going to get into the textbook of this in a minute. The hard one, though, is this. This is the second kind of setup. This is called a breakout. So down here, we got a swing, which is simply when a stock pulls back to support. Write that down, test at the end. What's a swing? Somebody type it in. What's a swing? And then we'll move forward. Let's see what your answers are. Okay, here they come. Here come the answers. Oh, hang on a sec. Is the camera in the way? Let's do this. Hang on a sec. And let me move it like this. How's that? That would be a little better. A swing is when a stock pulls back to support. Thank you, Fortino. Redondo Beach is treating me well. We have a heat wave going today. Nice and warm out there. Beaches are beautiful. They're letting us go back out from our quarantine. We're loving it. It's always nice in Redondo. I can't complain. So anyway, the second one, so there's your swing, pull back to support. Here's your support area, right? The second setup is called a breakout. This is when you have a double top or a new high. It could even be a triple top. And that's when a stock breaks out of that high. That's a very strong signal that it's going higher. Problem is, you're really far from support. So there's a lot of area to put a stop loss in here. So what happens on a trade like this, and this is very common, and this probably happened to you. And you can say, if it's happened to you, you can say that, yeah, that's me. Let's say I put my trigger. I'm going to put my trigger just above this candle. Okay. So I'm going to put my trigger right above this candle. And what am I waiting for? I'm waiting for a breakout. Watch what happens. The next day, green candle, no breakout. My trigger's right there. Let me make sure it stays there. Okay, is it staying there? Okay, there it is. See it? That's my trigger to get in. That's my entry. And boom, I'm in. Okay, it triggered me in, right? Now, it didn't finish where I wanted it to, so I'm in right there. It's still above support. Is the stock still a bullish trend? Yes or no? Is the stock still a bullish trend? Anytime a stock hits a new high, it's definitely in a bullish trend. Even if it sells off that day, it would have to sell off quite hard in the same day to be bearish, right? So now check this out. It goes one more day. And if I put my stop loss under this candle, what happened? I'm stopped out. But isn't it still bullish above this channel here? Now, as I go forward, let me keep that channel right there. As I go forward a couple days, if you put your stop loss too close and you're stopped out right here, how are you feeling right now when you see this? How are you feeling right now? Let me zoom into the current chart. When you get stopped out right here and the stock is right here, it's literally 30-something dollars higher, 10%. Has that happened to everybody? If it hasn't happened to you, you haven't been trading long enough. It usually happens to beginners, right? That little, now, if you didn't get stopped out on that one, check it out. When you back test these, you get mad because you start thinking, where did I put my stop loss too close? So I'm actually going to get rid of all these lines here. Hang on a second. I want to address something here. If I didn't get stopped out here, that means my stop loss was farther away, wasn't it? But if you got filled up here, sometimes you feel like your stop loss is too far. But question for you, isn't everything above this 20-day moving average bullish? Isn't it still bullish? Isn't the stock still bullish trending everything above that? As long as it's going up in that channel, right? So we're left with the decision, how far away is too far for the stop? And that's why we call it the art of the stop. Because right now, if you look at the channel, oh, hang on a sec. I'm going to draw a nice channel here. I'm going to use my drawing of the trend lines here. So watch this. Look how nice and parallel that is. As long as it's in that channel, wouldn't you agree? Just leave it alone. That would be called position trading, trend trading. Would you agree? As long as it's in that channel, leave it alone. But isn't it hard to do when you get filled on a stock here and the bottom of that channel is way down here? And by the way, the reward, the target is here, which is almost closer than the risk. So what I'm going to do is I'm going to break down the art of the stop. I'm going to show you how I do it, how I merge all the rules that are out there. I've taken, I don't know how many courses in swing trading, day trading, scalping, everything. And I don't know how many I've taught. So let me show you. Who here is beginner? Who's beginner? You got any beginners here? Yeah. So real quickly, we have what's called a step course in tackle trading. It's right under our courses. It's one of our most popular courses. There's a premium for it. You could go in here and it talks about stop losses, targeting, everything, swing trading, all the ins and outs of what I'm about to talk about in depth. So let me give you a little taste of that. And one of them is the art of the stop. Okay. So this is part of our step system. So take a screenshot of that. You have this course, go at your own pace. There's a test in there, quizzes. If you need any help on it, our coaches are here available. And I'm going to show you a little bit of what that looks like. And then we're going to go through a bunch of charts today, guys, if you have some stocks that kind of fit with what I'm talking about. So real quickly, here we go, beginners. This is right out of our step course, okay? Here we go. The core uptrend pattern. You've got a stock that's channeling. See how it's channeling in here? And I'm going to get a little different color so it stands out. What do you guys think? Orange. Make it a little fatter there. There we go. You guys see it? Here's your core pattern here. Here comes a breakout. The breakout is where? Right when it breaks this double top. Now, do you see the uptrend? It pulls back. And what did it do? It used, in fact, let me show you something here. Here's the stock right here. I'm going to go in yellow. See the double top? As it breaks the double top and breaks out, I'm going to make the resistance a different color. Does everybody see that double top that broke here? You guys all see that? Now, what did the stock do? On a breakout, it comes back, and now it just told you, the stock's telling you right here, it made a higher high. Does everybody see that? It made a higher high, right? A higher high. And the definition of an uptrend is a higher high and a higher low. So here's your high pivot. Here's your low pivot. Now, do you see how the high pivots, the ones on the top of the channel, went higher, and how the low pivots went higher? That right there is already drawing your uptrend channel. Does everybody see that? Now that we have an uptrend channel, it's easy to predict our target. Here's our next target, somewhere up in here. Because the trend will usually stay in that channel. It becomes evident. So drawing channels is important. That's a different class, right? Now, in a picture perfect world, this is usually what happens. Do you see that? Now, this textbook, right? And then we'll go to look at actual charts because it looks a lot different. You see the resistance right here? Let me draw that in there again. Do you guys see this resistance line? I'm going to draw some important points. Here's the resistance. When the stock, and I'm going to do this in blue, when the stock decided to break out to new highs, notice when it pulls back, it uses the high as support. So this is what resistance, I'm going to call this RES for resistance, turns into support. Now I want you to remember this. A good breakout. Now, do you guys see the breakout exactly where it is right there? Do you guys see it? I'm going to put it in that point, right? Anything above the resistance here, that is your breakout, your BO. Okay. You guys see it? I'm going to wait for your responses here to make sure you see the breakout point. So do you understand what we see when we see a breakout? Now, yeah, I'll wait for responses. Hang on. Okay, good. Now, how do we know it's a good breakout? When it pulls back, does it go below the breakout point or does it stay above that point? What's a good one? A good breakout with a continuation pattern up stays above it, right? Yeah, that means the buyers, the demand, they're not letting it get down to these prices anymore down here. So the theory is on a breakout, your stop loss could go anywhere below this, right? And you should be fine in a good breakout. Does that make sense? It could go anywhere below here on a good breakout, right? Now let's talk about the swing. Do you guys see the swing right here? Here's a swing low. So if we get a, and here's a swing low here, here's a swing low here. The definition is really not an art. An art means, you can put the stop loss kind of where you want. It's up to you. It's your system. It's where you see things. And art is subjective, right? So what you think is a beautiful stop loss is in the eye of the beholder. So that's why I call it the art of the stop loss. But there really isn't much art or subjectiveness to the swing low. Why? Because do you see the swing low right here? We wait for that to form. And the definition in the step book is pretty easy. We put our stop losses on a swing low just below that area right there. Usually a certain amount of points or a certain percent below. So really the stop loss on a swing is right there. It goes below the pivot. So somebody repeat this. On a swing trade, the stop loss goes just below the pivot, the support pivot. It goes below the swing, about 10% of an ATR. So somebody repeat that. Go ahead and type that in. Where does a stop loss go on a swing? And I'm giving you guys a chance to kind of screenshot this. It'll be on YouTube for a long time. So you can always refer to this video. I'm recording it. My sidekick, good friend, wingman, Tanyan the wingman is on there recording it. Yep. So what do you think? Oh, yeah, we're going to have a lot of examples, Felix, tons. So where does the swing low, where does the stop loss go? So you already figured that out, right? So let me fly through these slides and let's jump into these, okay? Do you guys see the pivot right there? Guess where the stop loss goes? You see that low right there? That's your swing candle. How do I know that's a swing candle? Usually you're looking for support, like a moving average in here, or the channel. Does everybody see the channel and does everybody see the swing candle? Okay, somebody tell me, where does the stop loss go right there? On that pivot candle. So first thing, identify the pivot candle. This is a swing. And by the way, that is a swing low. Why? Because it's on the lower end of the channel. See that? Where does the stop loss go? Somebody tell me. A swing high is on the high side of the channel up here. That's up here. These are the swing highs up there. Yeah, so it goes just below that. Now, how far below that? About 10% of an ATR to 25% of an ATR. So it's not really subjective. That's just where it goes. Why? Because think about this. Let's say a candle does this and it starts doing this. It starts going down. And it goes down. Isn't that a double bottom right there? Let me put the double bottom in there. Isn't that the last support right there? So if it continues below that, what is that? If it continues below that pivot, aren't we now making lower highs? And what? Lower highs, and now what? It's inevitable. It's going to be what? A lower what? If it's making lower highs and it breaks support, it's now making what? Lower. I'm going to make it easy. Lows. You got it, Donna. So are you in a bullish? So if it breaks that, support level there. Are you in a bullish trend anymore? So the odds of you getting whipsawed, first of all, let me back this up. Let me back this up. The channel. The odds of you getting whipsawed are stopped out early. If your stop loss is outside the channel, if it's out here, is a lot less. There's a lot less chance because once it goes out in this area here, it's higher odds that it'll probably start breaking down because what's happening? The channel's losing momentum. Okay, it's losing momentum. So the odds drop a little bit if it breaks outside the channel. Now, what do you think happens to your odds of it going down if the stock breaks the last pivot and makes that lower low? That's an LL for lower low. If it makes a lower low, the odds really drop that it's going to go back up. The odds actually shift to where? They actually start favoring the bears. So yes, you don't want the odds against you. So the chance of it being bullish have diminished quite considerably once your support is broken. Does that make sense? So again, stop loss under a swing low goes right under the last pivot. So here's the problem a lot of people have. They forget about the rest of the rules. They go, oh, the stop loss goes below the pivot. So if you take that rule and you try to apply it to the breakout, where would we put it? If we put it right here on a breakout, where's the last low? It's down here. Now here's the problem. If you get in right here and it starts to dip, your stop loss is way down here. That is too far. Now, why is it too far? Well, number one, it's not going to allow you to maximize your position size, but mainly because if your target is right here, if your target's here and your stop loss is here, what's the difference between the two? Isn't it about the same? That's a 1-to-1 risk to reward. The idea of making profit, especially in the long run, is if you get filled here, you want the distance to your target to be 2 times, let me make this in red, you want it to be 2 times your risk. So your reward, here's your money, is 2 times, so let's say the stop loss is right here. That would work, right? So what's bigger, the risk or the reward? What's bigger? Here's the reward right here in green, and here's the risk down here. What's bigger? So a good idea is have an idea where your target is. Does that make sense? Once you have an idea of where your target is, you can say, well, if my target is $2 away, I don't want my stop hang on a second, lost sound. If my target is $2 away, I don't want my stop maybe $1, okay? So bottom line, you can't use the swing rule for stop loss on a breakout very often. But what we're going to do is we're going to look for little pivots in here to kind of give us an idea. Does that make sense? So let's jump into that a little deeper. How about this? This right here on a pullback. If it's pulling back, is this a breakout or a swing setup? What would you call that candle right there? If it's on support, it's what? That would be a good swing setup. But do you ever get a candle like this right after a support candle? So this right here is your trigger candle. Let's say you put your trigger right above it right there. You guys all see that? Now this happens a lot. And there's a lot of different things to look for here. But let's say you trigger in right there. When you get your trigger on your swing, and here's your support candle, right? Excuse me, let me make this a little clearer. Here's your moving average right there. what are we looking for on the trigger, on that confirmation candle? We're looking for better than average volume. We want to see it better than average. Now, when I say average, higher than whatever moving average we have in here or in the past. You can compare back on bullish candles. You can compare back and see where the volume is. Now, just out of curiosity, this candle that triggered you in right here, does that look like a good volume trigger, yes or no? And I'm going to wait for your answer. Because we're looking for good volume on that, right? No. So do you think your stop loss needs to be far away, or would you tighten it up just below this candle? This is kind of giving you an idea that what's going to happen. The odds are it's probably going to go down. Okay. So we're going to put volume in there on these candles. So with a trigger candle, whether it's a breakout or a swing trigger, step 2, make sure it has what? Good volume. Okay. Just get your eyes trained to look at the volume. Now, key points. What is a pullback candle? A pullback candle is a candle that is kind of signaling a change is coming. A lot of times what you'll look for is, notice how the candle's stepping down here. You guys see how it steps down? And notice how the lows are stepping down. See that right there? Do you guys all see that steps? How do you know when it's a pullback versus bearish trend? Simply because, and we've gone over this in other classes, as long as it's above your moving average or it's in your channel, okay? Let me draw that a little clear here. So let's say the channel's like this. So see how it gets close to support? And then you get certain candle patterns like a reversal candle. We call it a reverse candle. Why? Sometimes, notice these are all dark shaded candles. They can be red candles, black candles, down candles, whatever color you have them. But here, the clear white candle is telling you that, hey, it held some ground here and it might be turning bullish. What we're looking for on a reversal candle is, number 1, is it near support? Number 2, has it broken the step down, the lower lows yet? That will be our signal that, okay, things have changed. So we're looking for this. So we can actually plan our trade, the entry and exit, just by this candle. So the entry would be above here and the exit would be down here. So if this is today's candle, I could set the trade up to get in right here, right? And get out right here. Now, based on that distance, that's when we get into position sizing, risk management, and everything else. You guys got that? Okay, now that is a signal candle. A signal candle is a candle on support where you expect a change in direction the next day. So on a swing low, it's pulling back to support. Signal candle, reversal candle, pivot candle, all the same thing. Got it? Now let me clear this. Do you see it here? Do you guys see it? Here's your support right in there. Do you guys see the signal candle? Which one is hitting support? That one right there. Now you could have got in right here. That'd be aggressive. Or you can wait for it to get above this one. There's still a lot more room to the upside than there is the downside. Now, where is the support on this candle? Now here, if I put my support here and my entry was here, I might want to use my stop loss under this candle or this one here. Why? Because I really only have 2 choices. This is support here, but isn't the trend support, this bottom candle right there, isn't that the lowest you'd put it? So really, Your stop loss would be below this candle or this one. This one is definitely a trend changer if it breaks. This would be the closest you would get. Now, after you're filled, guess where your stop loss would go? You'd bump it up to the support of this candle. So your stop loss is just trail or follow it upwards. You can manually move them. You can set it in the computer. I like to manually move my stops. Now that again is all based on a swing. You guys see it here? Now, where would you see? Now, this right here on a swing low, kind of look at this, and I'm going to give you a second to guess first, and then I'm going to tell you where I'd put my stops, all right? I try to move my stops every day if I can move them up. Some days you can't move them up, you just leave them there. Ideally, like let's say, for example, let's say I got in right here. My stop loss is here. After this candle closes, the stop goes to here. After that candle closes, the stop goes to here. After this candle closes, I move the stop to here. The day this candle closes, here, here. And I just keep moving it up every day. I would be stopped out right there. You can see my candle was right there. That's when you play swing to swing. Now, if you're trend trader, you might just keep your stop loss below this channel and you might be stopped out right here. So depending what kind of trader you are, you might use a different kind of trailing stop. You might even go to weekly chart and use the weekly candle. Now check this out. You guys have an idea where you'd put your entry and exit? Now for me, my aggressive entry would be above this candle. I might even let it get above that candle. You guys agree, yes or no? That's where I would put an entry. That's where I'm going in. You guys agree with that? Depends on the strategy, Diane. Sometimes I'll do market stops. A lot of times it's limits. It depends if it's an option strategy and what strategy I'm doing. But for stock, yeah, most of the time if it's liquid, definitely market's fine and how big of a position. Okay, great. Now, do you have an idea where you'd put your stop on this based on a swing? Would this be a good place to put a stop right here? And let me put it as a red thick line here. Is that a good place to put a stop? Yes or no? Is there any reason to go farther down than this? Yes or no? This right here would be the farthest I'd put my stop loss. Why? Because when it pulled back, that's the lowest point. Do you guys see that? That's the lowest point. If the stock turns and goes below that, wouldn't that start defining a downtrend? Does that make sense? Now, check this out. Where is my target? My target is up here. So if I trigger in right here, we'll call it 30. I'm going to call it 35 to make it easy. And my target is up here at the first resistance, 35.50. Okay. 35.50. Second target, 36.50. I want to make sure this distance right here is bigger than my stop loss. So if I get in right here, does that look good? So let me put the risk in here. Here's my risk. All this right here. Here's my risk. Now let me put in the reward. Okay. If I trigger right here above this trigger right here, here's all my reward. Is that a good risk reward? Yes or no? Risk is much smaller than my reward, right? So as long as this isn't too far. Now, if I trigger it in right here, look at the distance. And if that's my target right there, that distance is smaller than this distance. That's not a good risk reward. So my entry here, my stop loss would be, I got a couple of choices. That would be the farthest, or here, or here. Do you guys get it? How many of you guessed that right on the stop losses? Any of those three stops will work. If my target is up in this area, does that make sense? Even if I just go to this double top right here, isn't that fun? I mean, check this out. A lot of times you'll get a double top. Here's the reward. All this area is reward. Here's the risk. Did you guys get it? Pretty good, right? The green's a little bit, the reward, the green's a little bit bigger than the risk. All this is bigger than that. You guys think you got the rules for a swing now? Where to put the stop? Okay, because it gets harder now. Now we're talking about breakouts, and that's what this market's doing when it hits new highs. On breakouts, it's a little bit different. Remember, here's your swing right here. Here's your swing on support. A breakout is usually a lot of times really far from the last pivot. So it's hard to get the risk reward you want. So a lot of times your stop loss is going in that area. For example, how about this? Think about it. If I put my stop loss right here and the stock pulls back, isn't it still bullish if I get stopped out in here? So psychologically, you got to talk to yourself and say, hey, it's okay. I got whipsawed because my stop loss was too close. It was still inside the bullish trend. And then you got to decide, maybe look for candidates where you're not doing that. So here's a real quick picture of what breakouts look like. You got multiple highs, and then you got the breakout or breakdown. I'm just going to focus on the bullish. You got wedges that break out. You've got flag patterns, bear flags that break out and reverse trend. You got bear flag pennants, which are kind of wedges that break out to the upside, trend reversals. These are all breakout patterns, right? Now here's a pennant again here, which is called a symmetrical triangle. Then you got what's called megaphones. Now check it out. If I was to use the swing low stop losses, I'm going to try to put them in here. This is where you'd put the stops. You would put it here, which might be too far away. So that might not work. Here, sometimes this would work. Sometimes that work if the distance isn't too far. Does that make sense? But if you put your trigger here, that might be too far away. And isn't that below a lot of lows? So it's not going to work on that. You can't use the swing low for that pattern. How about this one? This one's making lower lows. That's not going to work, is it? Because aren't you putting it below something that's already in a bearish trend? So a lot of times that doesn't work. This one will work sometimes. How about this one? Do you guys think I should use this low pivot? If I enter right here on the breakout, if this is your trend, is this a good place to put the stop? Yes or no? This will tell me if you got it or not. Because on a swing low, you put it below the pivot, right? Or is that too far? Pretty easy question. What do you think? Too far, right? Now, how many people just now started realizing, oh, there's all these patterns. I didn't know you didn't know these patterns. What about this one? If I put my entry right here on a cup and handle, should I put it down here on this one or this one right here? So 1 or 2, which one would you use? You're entering on the breakout. Where would you put it? I'm sorry, this picture's so small. It's just how it is. So where would you put your... Very good. Now here comes a big quiz. Remember I said there's a quiz? What is a good breakout? Should it even get close to number 2? Yes or no? On a good breakout, a successful one. No, a good breakout should stay above that line, right? It should never go below this line. So a lot of people will put it right below that line. They won't even use the pivot. Let me repeat that. A lot of breakout players like Breakout Frank, one of our coaches, he'll put it just below this line because a successful breakout will break out enough to where you can take a little money off the table and get your stop loss really close. Starting to make sense? So you treat the breakouts more of an art. Excuse me, you use the stop loss more of an art, more of a preference, more of a style thing, of a style kind of trader you are. Long-term, short-term, swing low, swing high, trend, position, whatever it is. So looking here, I put my trigger. One second. I put my trigger above here, above resistance. My stop loss ideally would go below the support or just below the breakout point. Now there's a lot of choices here. Could I put it below this support? Sure. Could I put it below this support? Sure. How about this one? How about this one? So where would you be? Would you be on 1, 2, 3, 4, or 5? In fact, check this out, people. I'm going to make it easier. Would you put your stop loss? This is the farthest you'd go because this is support. Would you put it on red? Would you put it on orange? Would you put it on this support right here, blue? Would you put it on light blue? Or would you put it on, put a dark yellow just below this line right here? Now remember, the entry point is right here. This is where you're getting in. So everybody pick a color. This will be true art, all right? Now there's kind of a trick to this. Would everybody agree it'd be ridiculous to put it below any farther than this? You don't want it any farther than this because this is definitely a downtrend. Because what would that be if this broke right here? Do you guys see it? If that broke down right here, wouldn't that be an M? Do you guys see the M? Yeah, that's a bearish pattern, right? There's no reason to be in that. You should be bearish on that. So it depends a lot on what. Now, here we go. A lot of you, okay, who picked this one right here? Who picked that one right there? Who picked red? If you picked red or orange and your target was only right here, is that good or bad? Oh, by the way, if you're like me and slightly colorblind, that might be brown instead of red, right? Okay, now if your target is up here, you could have picked red, right? So if your reward is here, you might stick with these two. Again, it depends on your target. Does that make sense? Yes or no? Secondly, this is also true. If you buy the stock, a certain amount of shares, and you put your stop loss way down here, what is the risk? So let's say I get in here at 46 and I get out at 38. That's $8 risk. And if I'm doing 100 shares, then that's $800 risk. Too much. I'd have to go closer. Does that make sense? If it's too much risk, you might be forced to go closer. Okay, moving along. So looking at entry system, here's one technique. I'm not going to do a lot of systems here, but you take the high of the day. Let's say I'm looking at the high of the day at 44.48. Here's where I'm in, okay? One technique is I'll use 10 or 25% of the ATR. The ATR is 277. So what's 10% of that? It's about what? 28 cents. So my entry is basically 448 plus 28 cents. which equals what? 44.76. So here's my entry right here, 44.76. Or if I use 25% of the ATR, so ATR is how much a stock moves every day. This one moves almost $3, $2.77. I'd be using 25% or 69 cents, and my entry would be 45. So I have two choices of entry in here, okay? Now, based on my entry in here, where would you put the stop loss? So one technique on a stop loss is not only put it below this line, but also aggressive would be about 50% of the ATR. So if I get in at, let's say 46.83, if that's where I got in, and let's say my ATR is 104, what is 50% of that ATR? Somebody tell me. What's 50% of $1? It's about 50 cents, right? So my stop loss is 50 cents away. Do you guys see it? So I like to keep my stop loss. Now this is aggressive. This means close. Half an ATR below the breakout point. Here's the breakout point, right? And also make sure it's kind of underneath one of these candles. So would this be okay, looking at this right here? Would this be an okay place to put a stop loss right there? That's aggressive, pretty close. Another technique would be a full ATR, 1 to 1.5 ATRs. For example, below the entry price, not the breakout point, but the entry price. So if I entered right here, if I'm 1.2 ATRs below, it would put me right there. Do you guys see it? This one's 1.1 ATR. It's right there. Looking at these two stop losses, do you like this one better or this one? Here's A and this is B. Which stop loss do you like better? A or B, left or right? Here's A or B. Which stop loss do you like better? Now, if you zoom in, this one right here is above the bottom of that candle. Which one do you like better? Now, check this out. Doesn't B give you one more support level that it has to break right there? This is B. Doesn't it have to break below that candle right there? So it actually have to come back. So if you can, now why are we going, now on a moderately aggressive, why do we go over an ATR? Because there's psychologically, if this stock moves 283 a day and you get triggered, you know it takes at least one day before it turns against you. So that way, if you get triggered, it doesn't turn around in the same day. Can that happen today where you get triggered and actually stopped out in the same day? So anything greater than an ATR, anything greater than an average ATR, at least you have one day fighting chance, right? Nothing worse than getting whipsawed. So if your stop loss is less than 1 ATR, or you have a stop loss that's greater than 1 ATR, which one do you think you'll be stopped out of more often? The one that's less than ATR, right? And a lot of times if you're stopped out in the same day, what does that do to you psychologically? In this market, it happens a lot. Do you guys see the Friday sell-offs or the end-of-day sell-offs? And sometimes there's end-of-day rallies, right? So if you're conservative and you don't like stop losses on a breakout, you want to be below the breakout point. You kind of want to be below a support candle, kind of like a pivot if possible. If not, great. And you want to be greater than an ATR. So 3 things: below breakout point, below some kind of support, and greater than an ATR. Does that help? We're starting to dial this in, right? So if you use all those, you're still going to get whipsawed sometimes. But when you do get whipsawed, you're going to say, you know what? That was unusual. Would this be a good place for a stop loss right here? This be okay? Is it below the breakout point? Is it below a pivot? And the ATR here is 277. This one is 10% of the ATR below support. So if you can use a percent of the ATR, I like this one. 10 to 50%. I usually use 10% of the ATR below a pivot. If you can do that, if you get stopped out of this one, the odds are it's going to keep going down anyway. So if you could get away with something like this, and what kind of pattern is this you're looking at? Bullish triangle, right? On breakouts, bullish triangles. I love those because it almost tells you where to put the stop loss. It's not an art. It almost tells you. Okay. You don't have to be creative. Now, stop loss management. You guys were asking me this earlier. When you manage a stop loss, your goal, your number one goal is to get your stop to break even. That's the point you got in. And you want to trail it about 10 to 25% under a candle low. You want to step it up underneath the candles by about 10% of an ATR, just below it. So this one here, you probably would have been stopped out. Now you can also go to intraday charts, like 15-minute charts, 30-minute charts, 60, even a 5-minute. You might even be stopped out in some kind of swing inside the candle. Number two, if you hit a target or a profit target, scale out of some of it and then move the stop loss up. Once you scale out and get the stop loss to break even, you're golden. That's the whole goal. Get your stop loss to break even and take a little profit. And I see so many people miss a lot of opportunities to do that. So again, recap. Here's my entry at 44.76. My original stop was here. Where am I trying to get it to? 44.76. As soon as I can, and here's my target. Because now I have no risk. Once your stop loss is at break even, there's no risk. Now, I like to take a little profit off somewhere in here. So if I put my stop loss at break even and then it pulls back, I still get to keep the money I took off. So taking a percentage off is really where the strategies, systems, and money's made. Now, depending on your targets, you might scale in and out. So I might have a stop originally. Here's my target. My original stop's right here. I might go just below, like 10% of an ATR below the trigger point, and maybe I'll do a 25% below. Okay, so some kind of stop loss system. Is this helping anybody? Yes or no? Because once you dial in your stop loss, then you will start position sizing better and risk management better. It all comes together. And if you look at my previous classes, that's where we use the playbook. So if you're using the stop losses correctly, your batting average will be better. Your risk management will be better because your position sizing really depends on how far away your stop loss is. And position sizing is your first line of defense of risk management. Okay. Now, a lot of you guys already knew this, but has this helped? Yes or no? So I'm going to jump into some charts here for the next 15, 20 minutes. In the step system that I was showing you, you can really dial in your trading system. We go into the step. This is the premium membership, premium course we sell to members and non-members. So if you're one of those people that's, let's say, swing trading, and your entry technique number 2 is 50% daily above the resistance, and your stop loss could be about here. This is where you'd be here as a swing trader. So a swing trader is using a stop loss 1 to 1.5 ATRs below the entry price, or 10 to 50% of the ATR below the previous support level. It's one of these two. And the entry is 50% of the ATR above. You see how it kind of dials you in here? If I'm day trading, I'm going to use 10 to 25% of the ATR above, and I'm going to use a stop loss here or here. If I'm position trading, my stop loss is going to be 10 to 50% of the ATR. So basically, if you do a little screenshot of your stop losses here, do you know which one you're using based on a swing trade or a position trade, or if you're more advanced, a day trade? Have you even thought about a playbook like this? This is where mentoring and coaching really get good. And see, we can eye your account and eye your journals, because I've been trading over 20 years. I can look at your last 50 trades, look at your stop losses, look at your entry, figure out your position sizing, and go, you know what? We need to polish this up and dial it in. And that's usually all it takes. So who likes that? Was that good? Okay, I'm going to go through some stocks really quick. Apple, where should the stop loss be? You already, okay, here's the entry. Here's the breakout right here. Here's the breakout on Apple right here. Where should the stop loss be on Apple right now if you're in it? Here, here, or should it be above the break even? Where should it be? I'm going to let you guys call it. Should it still be below the break even, or should it be above it? How many people would move it up here? You got to try below the last candle, right? To be locking that profit. Was that a good breakout? Yes or no? It's still bullish. You do not want to be stopped out with a loss on this one, right? Is it possible if I took some money off the table, I could leave my stop loss way down here? Is that okay? So if I leave my stop loss below this trend line and I'm a position trader, I'm definitely taking some money off because it's hit my first target. I'm definitely taking money off. So that way, if it comes out and stops me out, I'm still making money. Does that make sense? Okay, let's go through some more. Okay, guys, I'm going to fly through these. How about USO? Let's look at this one. I'm going to zoom in on oil. It's not making a new high, but is USO bullish, yes or no? Here's the channel. If it breaks out above here, where would your stop loss go? Would you put your stop loss, now here's the target. Would you put your stop loss right below today's candle? Right below the trend line? Where would you put it? If you're treating this as a breakout, where would you put it? And this one's pretty easy. Isn't a good breakout supposed to do this? If it breaks this candle after the breakout, that's a bad breakout, isn't it? So on USO, my preference would be below here, especially there's two of them. So if this breaks out, now, if I get in, what's my ATR? See my ATR? $1.20. So if I get in, and I'm just going to pick a point, 29.30. The low of this candle is 27.80. What's 10% of the ATR? $1.20. So check it out. Just cut off that zero and look at the first two numbers. There's your 10%. So 12 cents. So when I look at the support candle here, the low is 27. It's about 27.72. So the low of this candle, the low right here, is 27.72. I subtract 12 cents from it. Oops. I subtract 12 cents. So where's my stop going? Somebody tell me. If I subtract 12 cents from 27.72, it's going where? 27.60. As soon as this breaks out and it's showing me profit, I'm moving my stop loss up to the breakout point. Now, if I'm a position trader, more of an investor mindset, I might put my stop loss down here. But on a breakout, is that a good breakout if it goes way past this right here? Is that a good breakout? Yes or no? No. So that one was pretty easy. Let's do a couple more. How about, have you guys seen this company before? AMD. Is AMD setting up for a breakout? Yes or no? What do we call that pattern? We call that a triple top, bullish triangle, or a cup and handle. Okay. So check this out. Easy way to do it. Breakout point is right there. I'm going to give you guys some numbers and you tell me where you'd put the 59.27 is the high. 59.27 is the high. What is 10% of an ATR? What's 10%? 21 cents. So anywhere from 10 to 25% of that. Can I just call that a quarter? So if I add a quarter to that, what does that give me? That means I'm getting in where? At 59.50. Is that good enough? Is that 10% higher? Yes or no? That's one technique to get in. Now, why is that important? Because what's my technique to get out? I want one ATR or more below that point, the breakout point. The breakout point is 59.27. My trigger ends right here. So what's one ATR? One ATR is 213. So if I subtract 213 from there, what do you get? One ATR, 213. Don't you get like 57, I don't know, 35? Is that what you guys got roughly? Make sure you're with me. This is where I'd put my exit. I'm going to test it first. So where's 57.35? Let me zoom in here. 57.35 is right there. Can I check this out? 57.35 would put me right there, right about here. Is that a good place to put a stop loss if my trigger is right here? The breakout point is right there. Or should I bump it down a little bit so it's underneath that support? What do you guys think? Or do I go this far down here or even farther over here? I want to be, this is the closest I'd be because I want to stay more than one ATR away. Now, why am I staying more than one ATR away? So one day move doesn't stop me out. Does that make sense? Now, one ATR puts me right there. So I'm going to put just a little bit. Now down here, I could put it here, couldn't I? But isn't that pretty far? The only reason I'd put it down here on AMD is if my target was really high. So let's say, let me ask you guys this. If I get in right here at $60 and my stop loss is, I'll call it 47. So 60 is my entry, 47 is my stop loss. That's a $13 risk. Where do you think your target should be if your risk is 13? Shouldn't it be way up here by 73? Right? So if your target's higher on the next move up than 73, yeah, put your stop loss down here. But be realistic. How many people think this will hit 73 before it sells off? Does that make sense? So looking at this, and if you have your brokerage open, well, let me give you some ideas. Would you put your stop loss? This is the closest it would go. Right there, that's green. Right here, orange. Or would you go the farthest right here, red? Green, orange, or red, which one? On a breakout. Keyword here, we're playing a breakout. Green, orange, or red? I want to see a lot of answers here. Come on, guys. Make me proud. We're there. Okay, we got some people. Hey, Fortino, you got green? Ahmed's got green. Absolutely. There's no reason, because would a good breakout stay above the breakout point? Yes or no? So if you're aggressive and you don't mind getting whipsawed a lot, you could go right below the line by 10% of an ATR, but you're not getting any candle support. So if you're okay not using candle support and you're just like, because check it out, anything above the moving average, this is all still bullish, right? If you're okay with that, and here's how I fix that psychological problem of getting whipsawed. Let's say it pulls back, whipsaws you right here and starts to go back up. Couldn't you place the trigger to get back in above that high? And maybe the next time it breaks out. And that's what Apple did, right? Okay, a couple more, guys. I'm going to fly through these, okay? And we're going to get really good. And you're going to start to see it after you do it 100 times. How about this one? Charter. Here's a good one, right? Oh, hang on a sec. Let me popped up on the wrong screen. There we go. Here's the breakout point. Could you put the stop loss right here? So after it breaks out, now that'd be a good stop loss right there, right? Because it'd actually be like a swing trigger. If it breaks right here, I would put the trigger in here or above the high. But I would immediately move it up because that is what? This right here would not, that would be way too far away on charter. And let me give you another example. Costco. How about Costco here? It's definitely bullish. Where does your swing go right now? Where's your stop loss go right now? Do you guys see the channel? If you get triggered in on this one above the swing low, your stop loss would go right there. There's no ifs, ands, or buts. That's pretty clean. One more swing setup. How about this guy right here? Let's go with AVLR. Okay, is that a swing or a breakout? AVLR, swing or breakout? That's a swing. Do you guys see the reversal candle, the signal candle? Right there. So where does the stop loss go? The farthest it would go is right here. Could you put it right here or right here? Got it? Okay. So if that's a swing low, let's go to a couple more here. What pattern is Lulu doing? Lulu just did a swing low, didn't it? Off moving it. But isn't this starting to touch a breakout right here? What's the farthest you would put your stop loss on this one? 1% under the breakout point. Let me zoom in on this one real quickly. 1% under the breakout point. So here's your possible areas of stop losses. Ready? I see 3 of them. How many do you see? I see 3 possible areas. After it triggers up here, you could go just below this line or more than an ATR here or below the pivot. But now think about this. If I'm triggering in at 325, because that's above the high, what is my stop loss if I go just below this line? 1 ATR is 11, right? So I'd want to go 11 points below 325, puts me at 314. So for me, I would be okay going right here because that is one ATR. For me, I like to be over an ATR. So that's mine right there. For me, I won't use the pivot. That's my choice right there. But could you go closer? Yeah. Could you go below the pivot? Yes. Question for you. Is this kind of far away? I mean, we're talking down here at 306, 307. Isn't that kind of far away from 325? That's not a good breakout. So if you identify a breakout, play the breakout. Don't give it so much room. Okay. What's another stock I was looking at breakout wise? WW. You guys see the breakout point here? Right there. Now, what's one ATR? $1.40. So check it out. Here's 28. Here's 28. That's the trigger in. Subtract an ATR, $1.40. Leaves me with what? 26.60. Use a calculator, make sure. Is 26.60 one ATR away? Right there. So there's my 26.60. Anywhere below 26.60 is good. See that? That's where I'm getting in. Here's one ATR away right there. Anywhere below that after this goes up. So basically, I already know that if this goes up, I probably won't be using this area. I'll be using something under here. Does that make sense? Let me do another one here that's popular. Square. And if you guys got any examples you want me to throw in there, I'll throw them in there. Okay, Square. Where's my break? Okay, I'm going to ask you guys, where's the breakout point here? Give me a point. What point would you put your entry? The high is 92.97, which was created today. Where would you put your trigger in? So where's the trigger going in at? Where are we going in at? 10% above the high would be what? 10% of the ATR is 40 cents. So somebody give me a trigger in. What is it? Wouldn't it be 90 what? Here's your trigger in, 93. Would that do it? 93.40? Would that be okay? 10% above this high? 10% of that ATR? Is that what you guys got? 93.40? How far away do I want my stop loss from my entry? How far away do I want my stop loss? Somebody tell me. Now I want to get a lot of answers here. A lot of answers, guys. For me, I'm probably going to go farther than what? On my stop loss. If I get in at 93.40, I like to be greater than, yeah, $4 on ATR, right? So I would be where? Somebody give me a point. So I'm going to test it. So one ATR lower is what? So I don't get stopped out on the same day. Would put me at 89.40 or lower. So I come over here and I check out 89.40. Where is it at? 89.40 puts me at, let me zoom into this. Let me fix it. 89.40 puts me at, I'm really going to zoom into this. Right there. My stop loss goes right there. So what I'm going to do, I'm going to look at the low of the candle. And maybe, I might even go here below that support. Is that okay right there? If it's just a little bit less. So here or here. Does that make sense? I'm going below a support of a candle or a pivot if it's close enough, and at least one ATR. Did somebody else have one or that you want to look at? Now on our 5G list, we have a lot of plays on the 5G list. You guys have seen my 5G list, right? I've been playing that like crazy the last month or so. And let me see something here real quick. I'll put that link in there. I'm going to put this link in here really quick, guys. So if you want to see how I build breakout list, I'm going to put this in the chat link. So hang on. There it is. Okay. So that is my 5G video. And while we're at it, dude, go ahead and hit like on this if you would. That helps us out. Okay. You guys had some picks you want to look at, breakouts. So if you want to find breakout plays and how we do it and the system behind it, which is phenomenal, how we use good sectors that are leading the market with relative strength and how I play those breakouts. And now you know how to put the stop losses and position sizing. That's the list you want to use. Right now, 5G technology is really kicking butt. So that's where, okay, so what do we have? What kind of Dollar General? Is that a breakout setup? Okay, wow, we've dissected this thing on one of our shows before. Check this out. Do you see this past breakout? This is a great example. Here's your breakout candle. Notice when it broke out right here. God, this is a great example. Check this out. When it broke out right here, notice that it came back. It came back right there and stayed above. This is why I like to stay above a support. Then it went up and it held the moving average. But do you see how it came back to here? Look how far it came back. Here and here. So when you look back, you're thinking, not only did you want your trigger above this. So what's the ATR? 5. So if you triggered here at, let's test it. 185, you'd put your stop loss at 180. See how you want it below the support? Yeah, you'd be right in here. You'd be somewhere in here. This is why you won one ATR. So it doesn't hit you. You're over $5, so it doesn't hit you. And then it goes up. What do you do when it goes up? You move your stop loss to break even. And you're probably stopped out here if you didn't take any profit off up here. But this is your swing to sell right there. That's your triggering. So basically, very good example. Love it. Entered here, stop loss down here. Moved your stop loss to break even right here, stopped out right there. Anybody else have a symbol? PayPal. That's another popular one lately, right? So let's check out PayPal. PayPal is breaking out right now. Great example. Let me do this one. Kind of late to the breakout, right? Where was the breakout point? Right here. So let's set this up. Where's my trigger to be to get in? The high is 160.89. Our ATR is $4.77. So I'm going to take the high, 160. Let's set this one up, 89. I'm playing this as a breakout. Where's my trigger to get in? I'm going to get in up here, right? I'm going to take 10% of that ATR, which is what? Take the first two numbers, 47 cents. And what do you get? 161. I'm just going to call it 161.40. Is that okay? Now, where's your stop loss going to go? So that's my entry. That's where I'm getting in. Now my stop loss is going to go where? Down here somewhere. Where exactly? Where's the art? Well, my little pattern for my template is 161. I'm going to subtract what? I'm going to subtract an ATR. I'm just going to call it 480. And what does that give you? To make sure I'm correct, I'm going to make sure 161.40 I'm using a calculator, minus what? 480. I want to keep it at least 48 or 156.60. So 156.60 or lower. Now I test it. I want to see if that looks like it's far enough. 156.60 puts me right there. So let me zoom in. Right in here. It puts me just below that candle. So I'm going to put it right in here, right below that candle. So here's my entry. Here's my exit. Do you think I should put it below this pivot down here at 149? Because isn't 149 kind of far away from 161? Because a good breakout should hold that breakout point, right? Any questions, guys? Any questions? Okay, so now when you guys go into tackle trading, finally, I want to finish with this. Let me show you how this really, really helps. If you're part of our pro members, check this out. Remember I was showing you the step system? This is everything and 10 times, 100 times more what I was talking about in depth. It goes in depth on the swing, stop losses, triggers, which is the foundation, which is everything. But when you go into our reports, like our stock report, you're going to be able to choose in here. Now, this is for pro members. Every weekend, we put breakouts and swings. You're going to be able to have more confidence. And here's a stock report that we just did. This is Noah Davidson. You can look in here and say, you know what? With the way the market is and everything's breaking out, here's one right here, CCI. That's a swing low, swing low. Herbalife breakout up here. Pull back. Here's a possible, you guys see the breakout right here on Nuwan? Double top right here, 24 is the trigger for the breakout. I find my ATR, my stop loss goes below that and probably this candle here. Either or both, right? There's a breakout that already happened. What do you think we're doing right now with our stop loss on this one that broke out? Are we leaving it there or are we moving it up to break even? Moving it up to break even. And of course, I put together the infamous options report, which is really doing great. Here's the options report. And I talk about exactly using limit orders in this marketplace, which is important. What kind of pattern is this, guys? What kind of pattern are you seeing right there on Facebook? Swing low or breakout? So you know my trigger is going above this double top and my stop loss is going over an ATR away. That's for my style. And I'm trying to get it under this candle here too. So at least an ATR and under a candle of support. This is too far. This is too many ATRs. You guys got it. Any last minute questions? The stock and options report is for our pro members. Yeah, we have a trial link. Go to our homepage, Ahmed, and believe me, you'll like our trial. Take a jump at the stock and options report. Look at our playbook of all of our strategies we give you for free as a pro member. Look at our journals, our step program. We have the best that's out there, and we have a lot of great teachers. So I got a question for you guys. 2 questions, and we'll end this. Did you learn anything tonight? Did it help you polish up your skills, whether you're beginner, advanced, whatever? Did it help you? Yeah, great question. The step system. And being one of our members, we teach this all the time. final question, you guys. Final question. Did you have fun? Did you guys have fun? Awesome. Great. Thanks, everybody. Let me put that in there. And this is recorded. If you have not been a member of Tactical Trading, now is the time. And we have a lot of members here. They have a lot of great things. Real quickly, do you guys see that little thumb up where it says 35 in there? Can you click that as a positive if you like what you learned tonight? Give me a yes. Also, can you hit the subscribe button? That really helps us out. It really does. That's all we ask for. Since this is a free live class. So yeah, hit the like button, the thumbs up. You see a thumbs up right there? Right? And we've got 2 people. Thank you. Got 2 out of 100 and something. And subscribe. Now, if you subscribe, you'll find it popping up on the schedule for YouTube TV. And we have a show every day called the Halftime Report during the halftime of the market. That's live also. And that's about an hour to an hour and a half every day. And that's at 12:30 Eastern. And you don't want to miss that. We have live shows all throughout the week for our pro members. We have lounges every morning and classes like this almost every night. So yes, be a part of Tactical Trading, guys. Glad to have you. If you're brand new, check out the free trial on our website, tacticaltrading.com. It's right there underneath the content. There's a link to it where you get a 15-day free trial. And we know you'll like it. Thanks for your time. Any questions, shoot them our way at team@tacticaltrading.com. This video will be archived and recorded. We have a lot of videos on YouTube, thousands, by the way. And have a great rest of your week.